Well, we're tracking something of a surprise announcement from the EIA. The administration says U.S. crude oil supplies grew unexpectedly last week, and so did gasoline supplies here in the U.S. Despite the news, though, oil is still trading higher this morning. Here's a look at the latest numbers. Oil once again closing in on $78 a barrel. It is up 70 cents on the day. And natural gas up 4 cents so far, now trading at $4.58 per 1,000 cubic feet. Taking a deeper dive into the latest numbers is Elliott Gue, our regular Thursday morning guest. He is editor of the Energy Letter and also the Energy Strategist. Elliott, good morning to you.
Good morning.
Once again, we're looking at the dollar, aren't we? The dollar drops in terms of its strength, and so the price of oil rises. Is it turning into a simple formula right now?
Well, that's certainly one of the factors. The dollar's been very, very weak all year, basically, since the beginning of this year, and that's certainly been a catalyst for rising oil prices. But you do have to look at it and say that oil is also up in euro terms. It's up in pretty much any currency you'd want to denominate it in. So I think that's part of it, but not the whole story.
Is it strange to you that supply and demand seem to make so little difference on the markets right now?
Well, I think the market's kind of looking ahead to what the supply is likely to be, say, a year from now or 6 months from now. And I think what we're seeing is a tightening in supplies globally. The U.S. used to be the driver of global oil demand, really the sole driver. But now it's really these developing countries, China, India, Brazil, other countries that are seeing growth in demand much, much stronger than the U.S. or Europe, which have been traditional big markets for oil. So, looking solely at U.S. inventory numbers isn't quite as predictive of future prices as it used to be. And I think right now we're looking at a Chinese economy that's growing at close to 9%. We're looking at a U.S. economy that's recovering, a European economy that's recovering, but very strong growth in the developing world. And I think that's going to start to tighten up supplies as we move into 2010.
We had a discussion about this a little earlier this week, Elliott, and that is the role going forward of deep water wells in the Gulf. We're seeing some companies talk about production growing. I think over the last year it grew for the first time in quite some time domestically. When do you see that pushing oil prices down somewhat with supplies growing? Well,
the U.S. oil supply from the Gulf has been starting to feed in. We've had a number of wells come on stream, and they've built platforms, and they've been able to get that oil to market. So, U.S. oil production is growing for the first time in a long time. However, the general trend is still pretty bad. Really, oil production from the U.S. peaked out in the early 70s and has been on a steady downward trend over the last since then. The other thing to note is that the reason that companies are going after these deep water wells is because there aren't opportunities onshore anymore. The big onshore fields are mature and seeing declining production. Countries like Mexico are seeing very rapid declines in production, and it's really pushing companies to go out and invest billions and billions in offshore development. That's not going to be economic at oil prices sort of under $60 a barrel, because they're not going to earn a reasonable return on their investment. So, though that would tend to increase supplies and therefore put a cap on a rise in oil prices, you got to remember too that that's all going to go away if oil prices don't remain relatively strong.
Let's switch over to the natural gas market right now. And Elliott, you and I had this discussion on Monday as natural gas prices were taking, I think, a 7 or 8% tumble in one day after a pretty big run-up the week before. The factors at work are generally behind the scenes and various aspects of the economy, correct?
Right. I mean, you're looking at basically, again, demand and supply. But on the demand side, really looking at the potential for a bounce back in industrial demand. That's been where most of the demand destruction has come in the natural gas market. Natural gas used in electric power generation is actually pretty strong because a lot of companies are switching from coal to natural gas right now. So it's really industrial demand. We are seeing the beginnings of a bounce back in that. It's very hard to get clean numbers on this. The EIA releases a monthly natural gas report on the final day of every month, so that was Monday. And it's with a 2-month lag, and they look at consumption and production of natural gas, so with a 2-month lag. We did see consumption up, and industrial consumption up year over year for September, but it's unclear how much of that is due to maybe hurricane disruptions September 1 year ago compared to this September, which was relatively clean. A lot of industrial uses are along the Gulf Coast where that might have been interrupted. On the production side, there was a 2.2% month-over-month decline for September in U.S. natural gas production from the lower 48. And it was pretty broad-based. Louisiana was up because of Haynesville shale development. Most other states were down. That is going to be a key thing to keep an eye on as we move forward over the next several months. We've been talking about this pretty much all year. All the natural gas producers have been talking about this all year. When will those production declines begin to set in for the U.S. natural gas market? We got some indication of that in this report, but you really need to see that continuing.
An article in the Washington Post today about the development of shale gas here in the U.S., a story that's been told several times. But one of the interesting factors I saw, Elliott, is that it pointed to the fact that because of shale development in part, coal-fired generation is down on a year-to-year basis. Natural gas generation is steady. But when do we see an uptick in that potentially? Does it take legislation, or is it simply the demand for cleaner burning fuels in the absence of legislation or regulation?
Well, I mean, coal-fired power is usually cheaper than natural gas-fired power.
Unless you put a price on carbon.
Right, exactly. And that would add significantly to the cost of coal-fired power and make natural gas-fired power relatively more attractive. In fact, I think if you see a larger price for carbon being put on the market in future, you will see natural gas see a big uptick in use. The reason is there's no immediate alternative. If you're looking to build a new power plant that's emissions friendly, you certainly can't build a nuclear power plant in any reasonable time frame. Those take many years of
or potentially for a reasonable cost either. That's another factor.
Exactly, and then there's just as much uncertainty about that as anything else, as what the price of carbon is going to be. You can't really, alternative energy plants aren't going to do you a whole lot of good near term because they're not really baseload power. And so they're only useful to an extent. Your only real choice is to put up a natural gas plant, which can be permitted relatively quickly, constructed relatively quickly, and can provide you with always-on baseload power. So that would certainly be a factor. But I do think that one of the major reasons you're seeing coal-fired power generation down year over year this year is twofold. One, natural gas prices are very depressed right now because of the drop-off in industrial demand and the supply growth. Secondly, the U.S. economy has gone through a nasty recession, so overall electricity use is way down.
Final question, Elliott, any predictions for the EIA's natural gas report today?
Yeah, we're looking for the first drawdown this season.
There's not much more room to build.
There is not a whole lot much room to build. We're looking for a very small drawdown, somewhere in the 3 to 5 billion cubic foot range. But it is significant that this will mark sort of the very beginning of the drawdown season. Typically that can act as somewhat of a catalyst for the natural gas market because it becomes a shift where people are no longer looking at what the current supply situation is, but what winter weather is likely to bring over the next 3 or 4 months in terms of a drawdown. Where are we going to end the season, not where are we starting the season? All
right, a close look at that coming up at 4 o'clock on the Energy Report. Elliott Gue is our regular analyst regarding these markets. He is with the Energy Letter and the Energy Strategist. And Elliott, we'll do it again next time.
Thank you very much.
Next Thursday it is. Thank you.